Hi there. Welcome to Trading Day. I'm Paul Bagnall. Thanks for sticking with us here on BNN Bloomberg. Here are some of the latest stories that we're following for you in the BNN Bloomberg newsroom. Aecon Group is the biggest laggard on the Toronto Stock Exchange today, certainly among TSX composite companies. The construction company posted revenue that jumped 25% from the year earlier period in its most recent quarter, and it saw a record backlog, but it also said profit fell 89%, well below what analysts were expecting. Aecon says the drop was due to higher than expected operating losses related to 3 joint venture legacy projects. Here's another stock that bears watching today. TFI International, the trucking and logistics company, missed profit estimates in its latest quarter as the trucking industry continues to grapple with weaker shipping demand. TFI's net income for the quarter was 39% lower compared to the same period last year. On the upside, business acquisitions helped boost the company's revenue to nearly $2 billion US. Shares of Teck Resources are also moving higher, more than 5.5% up, after the mining giant beat revenue and profit estimates in its most recent quarter. The Canadian miner says profitability was boosted by higher copper and zinc prices and by strong copper volumes. Copper production increased by 7% despite an extended shutdown at Teck's Big mine in Chile. Meanwhile, Teck says it's working to minimize the impact of tariffs on its mine in Alaska. There's the S&P TSX Composite Index. That looks like a high for the day so far here in Toronto. It's up by nearly a full percentage point to 24,707 points. There's the picture in the United States as we move into the second hour of afternoon trading. Those are sizable gains, of course, and they would be on top of sizable gains at the close yesterday on the major U.S. indices. Well, my next guest says he normally spends the vast majority of his time on developments in the fundamental businesses that he owns on behalf of clients. These days, however, he's paying a great deal more attention at the macro environment picture. We're joined now by Tim Regan, Managing Director and Portfolio Manager at Kingwest Company. Thanks for joining us.
Thank you for having me.
What kind of macro clues are you looking for in terms of evidence of where this is going and how the securities that you own may be affected?
Well, the macro clues all lie in Washington, and with the different opinions even amongst his cabinet as well. But I think the last time we spoke, I said that it looks like Trump will probably walk things back. He can't afford this economically, and that is happening. The biggest thing is if he does not settle the tariff issues in a timely manner, it can have reverberations into the economy, and that's what we don't want to see.
The Wall Street Journal has an article today, a headline something like Donald Trump finally met the opponent he didn't want to meet, and that's the stock market. And they referenced Secretary Bessant, Treasury Secretary Bessant, making some conciliatory remarks on China, recognizing that 145% tariffs on China are not realistic. What kind of economic indicators will you be looking at? We're still early on in this story, but every month, as we know, U.S. inflation gets reported, U.S. GDP growth gets inflated, U.S. sentiment numbers get reported. What kind of things will you be looking for as the months churn on?
Well, as the months turn on, data is backwards looking. You have to look forward. One other thing, when you mention the markets and Mr. Trump, it's also the bond market. It's the 10-year yield that he would like to see down that went up. But if one looks at it, we are going to get a U.S. GDP report on April 30th. GDP now, the Atlanta Fed forecasts it to be down a few percent. And if there's reverberations, we could have a technical recession in the first 2 months of this year, but we don't know. And the markets really price that with a lot of the Trump talk. So we'll see how things go. You're starting to see earnings come in, and they're all over the map for different companies for different reasons. And so that's when we look at it and say, okay, we kind of don't know the macro picture. Let's take a look at the individual companies.
One thing we're seeing, and this was predicted by many market watchers, is S&P 500 companies saying our business is being hurt, or certainly our business is facing uncertainty because of White House tariff policies. Last night after the bell, PepsiCo, Chipotle Mexican Grill, and Southwest Airlines all had that to say. Do you expect more of that as earnings season rolls on?
Oh, they're coming out with it every day. That's one of the talks, is how are tariffs going to affect your guidance going forward? And we're seeing different things. We're seeing companies factor it in, companies throwing in the towel and saying, we don't know. So the faster this is resolved, the better. Economies and businesses are somewhat stalled in their capital expansion, and you need them to move forward, not backwards. They're not moving backwards yet, but the sooner that Mr. Trump can settle a lot of these issues, the better off we are.
Okay, what sectors of the economy are of the stock market, rather, sectors of the stock market are you avoiding right now?
I guess, what are we avoiding right now? Some of the things that we're avoiding are things that we've always avoided. We don't get too much into commodities because we can't guess the prices and they swing like crazy. Some of the other areas we've avoided, the airlines over the last year, just because we can see travel, but it's a one-by-one thing. And some companies that may be geared a little bit more towards losing a lot with tariffs are also the ones that have been beaten up and could provide the best opportunities.
Okay, let's go to some stocks that you do like. Legion PLC is one, ticker symbol ALLE in New York. That company, and there it is on our screen, up about 10% over the past year, up in a big way today, 10% today.
Yes.
Today alone. It's a security products and solutions provider.
Yeah, really, Legion is a spin-off of Ingersoll Rand. It's one of the world's biggest lock and key makers. If you know Slage, Kryptonite, also your electronic locks are probably made by them. They're at 130 companies all over the world. Not a huge company, but today they came out with earnings. They actually provisioned $80 million this year for headwinds from the tariffs, and they're still going to be above or at least match earlier expectations. And so a lot of these companies are provisioning for this. What happens when tariffs don't take place? You'll see a much better corporate picture. And Legion, you showed it over the last year. We've owned it actually for over a decade, and it's been a wonderful company. Flies in under the radar, an American company that's based in Ireland. We know a few of those companies. And so this is one of our longer-term holds. Legion
today reporting results. That's why the stock is up, been up as much as 12%. The company reaffirmed full-year profit outlook and said the guidance includes the effect of tariffs enacted as of April 22nd. So there's one company that seems to be saying we're not going to be adversely affected by tariffs, at least on the bottom line. Comcast is another one of your picks today. That's, of course, the broadcasting and media company.
Broadcasting and media, and this will be a different tale of the tape today. They came out with earnings as well. And the negative with the earnings was they lost 50,000 more broadband subscribers than the market thought they would. But Comcast is one thing that it has a lot of different components to it. NBC, Universal Parks, there's not just broadband, they've got Peacock, there's a whole bunch of parts to it, and it trades at about 8.5, well, I'll say 8 times, now that it's down today, forward earnings. And this is a very, very cheap company, and it's really been punished a little bit more than we think it should be because of the broadband.
Let's go to Canada for your next pick, one of the most prominent stocks on the TSX and one of the ones that's almost always in the top most influential list because it's a big one, Brookfield Corporation, the parent of Brookfield Asset Management. Yeah,
the parent. I mean, you can't own them all, and we like to be at the top co. But Brookfield's a fantastic asset manager. You look at how volatile it is. But with all their different, we'll call them LPs, whether it's infrastructure, private equity, credit with Oaktree, they're not as volatile. The stock always seems to be. We did a study that actually these Brookfield, the Apollos, the Blackstones, the KKR, the share price over time does better than their underlying products, which do about 11 to 12% a year. They've been, and we should put in that we do have with my guest position, we own everything that our clients own as well, and we don't do any investment banking. So, if it's good enough for my family, and it's good enough for our clients, and vice versa. But it's been a great hold. They're gaining assets. This is a space where everybody's moving into, and the best is yet to really come for Brookfield. And they're doing a lot of little things at the margin that will actually increase shareholder return.
Is there any clarity on executive succession at Brookfield?
Bruce Flatt, I guess, would be early 60s. He probably has a few more years left. They've got some tremendous, like Connor Teskey, some tremendous young people. That's a big focus in Brookfield is the succession. And that probably won't happen for another 5 years, but they're already on top of it with smart younger people, and a lot of them. So absolutely, it's something that we feel very comfortable with.
Tim, thanks a lot for coming by.
Thank you for having us, Paul.
Tim Regan.